Today I'm going to be talking about the insurmountable cliff that first-time buyers have to climb in order to secure a deposit for a property. There's an excellent study by Graeme called Resentful Renters, how Britain's housing market went wrong and what we can do to fix it. In this report, it outlines the collapse in home ownership for younger people. Between 1991 and 2016, the proportion of 25 to 39-year-olds who own their own home almost halved, from 67% to 38%. The collapse among 18 to 24-year-olds was even more vertiginous, falling from 36% to just 10%. So for those who say buying a property is as affordable today as it was in the 50s, 60s, 70s, 80s, need to read those statistics because they say something completely different. And it's not just that younger people are not interested in owning a home. It's because they cannot afford a home. It's that simple. They want to, but they cannot afford it. And another interesting statistic is the median deposit for first-time buyers is around £30,000, while the median savings of a tenant with a similar income profile to existing homeowners is just £3,000. That's the height of the cliff that has to be scaled to get that deposit and finally get your foot on the first rung of the property ladder. And it's only getting taller, the cliff. There's an estimated 3.57 million so-called resentful renters. These are people who would have been homeowners before the financial crisis, but now are not because the prices are simply out of reach for them. And the deposit is the block between them being a renter to becoming a homeowner. Let's take a look at another chart. This is UK house price to earnings ratio. So the average property price versus the average salary. This chart represents that the average house price is nearly 8 times the average salary. Historically, this is an all-time high. Back in the 50s, 60s, 70s, it would be anywhere between 2 to 3 times the average salary. So again, if anyone says property is as affordable today as it was in the past, are wrong. They cannot read these charts and they refuse to debate with statistics. Let's take a look at another chart. This is home ownership for those aged 25 to 34, and you can just see the decline in home ownership for this cohort. The study by Graeme does have a solution to this problem. It is, in a nutshell, to lock in very low interest rates over the whole term of a mortgage. And the thinking behind this is that the deposit's the problem, but servicing the debt is not the problem. And yes, if you're paying very low interest, then a deposit of £30,000 is a much harder problem to solve than servicing a 25-year mortgage at maybe 2.5% lending rate. However, this assumes that we're going to be living in a very low interest rate environment for the next 25 years, which has its own problems. If you have a couple of million mortgages that are all locked in for 25 years, what happens when interest rates do go up? The banks will take the hit because they've locked in long 25-year mortgages at say 2.5%, and the Bank of England base rate could be going up to 5-6%. The banks are going to lose big time then, and you might think, well, that's their problem. But as we know, when banks have problems, sadly, they become our problems. So I'm not too sure what can be done. I also think that if we have a low interest rate environment for 25 years to come, I mean, we're going to be comparing ourselves to Japan, who've done the same. And I'm not sure that's a good thing, really. I'll wrap it up there. Any comments? Please leave them down below.